The European Union is navigating a complex global landscape, marked by shifting alliances and emerging economic powers. In this dynamic environment, the EU is constantly reassessing its strategies to maintain its influence and economic stability. Following the 2024 European elections, a significant shift towards China is evident. This pivot is not just a fleeting change, but a strategic move aimed at securing long-term benefits for the European Union. This pivot seeks new trade and investment opportunities, recognizing China's growing role as a global economic powerhouse. The EU is keen to tap into the vast market potential and technological advancements that China offers. The EU is exploring deeper economic engagement with China, aiming to foster a mutually beneficial relationship. This includes not only trade but also collaboration in various sectors such as technology, manufacturing, and green energy. Ursula von der Leyen's re-election as Commission President signals continuity in China policy. Her leadership is seen as a stabilizing force, ensuring that the EU's approach to China remains consistent and strategic. Technology, manufacturing, and green energy are key sectors in this engagement. The EU is particularly interested in China's advancements in renewable energy, which align with its own climate goals. The EU aims to access Chinese advancements in these areas, leveraging them to boost its own technological capabilities and drive innovation across the continent. For China, the EU market is vital for goods and technology exchange. The European Union represents a significant consumer base and a gateway to other markets, making it an essential partner for China. Joint ventures and projects are being initiated to leverage mutual strengths. These collaborations are expected to drive economic growth and innovation, benefiting both regions. The focus on green energy aligns with EU climate targets and China's sustainability goals. Both parties are committed to reducing carbon emissions and promoting sustainable development. The EU's pivot is driven by a desire to diversify economic partnerships. By engaging with China, the EU aims to reduce its reliance on traditional trading partners and open up new avenues for growth. This reduces reliance on any single trading bloc or nation, thereby enhancing the EU's economic resilience and strategic autonomy. The EU regards China as a partner, competitor, and systemic rival. This multifaceted relationship requires a balanced approach, combining cooperation with strategic caution. This complex framework guides interactions, balancing cooperation with caution. The EU is mindful of the challenges posed by China's rise, including issues related to human rights and market access. On April 3, 2025, China and the EU agreed to restart trade negotiations. These talks are seen as a crucial step towards deepening economic ties and resolving outstanding issues. Talks focus on electric vehicle supply chains and pricing mechanisms. Both regions are keen to lead the global transition to electric mobility, and collaboration in this sector is expected to yield significant benefits. Chinese President Xi Jinping's European tour in May 2025 emphasized the EU's importance. His visit underscored China's commitment to strengthening ties with Europe. In France, President Xi urged President Macron to defend global trade rules. This appeal highlights the shared interest in maintaining a stable and open international trading system. The lifting of Chinese sanctions on EU lawmakers in May 2025 aimed to improve relations. This move was seen as a gesture of goodwill, paving the way for more constructive dialogue. These developments underscore the strategic recalibration in EU-China relations. Both sides are working towards a more balanced and mutually beneficial partnership. The EU's approach reflects a nuanced strategy in a shifting global landscape. By engaging with China, the EU aims to secure its economic future while navigating the complexities of international relations. Former U.S. President Donald Trump has been vocal about the EU's ties with China. He has consistently expressed his concerns regarding the growing economic relationship between these two major global players. He views this as a challenge to American leadership. Trump's administration believed that the EU's increasing closeness with China could undermine the United States' influence on the global stage. Trump's concerns highlight potential dilution of transatlantic alliances. The traditional bonds between the U.S. and Europe could be weakened if the EU continues to deepen its economic ties with China. He argues that increased EU-China trade could harm U.S. market share. The fear is that American businesses might lose their competitive edge in key industries. Concerns about intellectual property theft and technology transfer are raised. The U.S. has long accused China of engaging in unfair trade practices, including the theft of intellectual property. Trump's rhetoric paints China as a tough negotiating partner. he often emphasized the need for the U.S. to adopt a more assertive stance in trade negotiations with China. This skepticism affects U.S. perceptions of EU-China agreements. American policymakers and businesses are wary of any deals that might give China an upper hand. The EU faces a dilemma: economic benefits with China versus U.S. relations. European leaders must balance the potential economic gains from China with the risk of alienating their traditional ally, the U.S. Moving too close to Beijing could strain transatlantic partnerships. The EU must tread carefully to avoid jeopardizing its long-standing relationship with the U.S. Trump's tariffs on EU products remind the EU of potential U.S. retaliatory measures. These tariffs serve as a warning of the economic consequences that could follow if the EU aligns too closely with China. The EU must weigh its strategic options carefully in this geopolitical chess game. The decisions made now will have long-lasting impacts on the global balance of power and economic stability. Canada, under Prime Minister Mark Carney, is undergoing a significant transformation in its trade policy. The government is rethinking its approach to international trade, aiming for a more balanced and secure strategy. There's a noticeable pullback from aggressive engagement with China, reflecting a cautious stance. Instead, the focus is now on strengthening ties within North America, particularly with the United States and Mexico. Rising geopolitical tensions with China are a significant factor driving this strategic shift. Canada is prioritizing stability and predictability in its trade partnerships, seeking to avoid the volatility seen in recent years. The vulnerabilities exposed in global supply chains have highlighted the urgent need for diversification. As a result, Canada is actively bolstering trade with its North American neighbors, the U.S. and Mexico. This strategy aims to enhance supply chain security and ensure more stable markets for Canadian businesses. Interestingly, Canada's approach contrasts sharply with the European Union's continued engagement with China. This divergence in strategies may have implications for Western alignment on China policy, potentially leading to new dynamics in international relations. The U.S.-China trade war defines the global economic landscape. It reflects deeper strategic competition beyond economics. A temporary tariff reprieve in May 2025 did little to resolve issues. The U.S. doubled tariffs on steel and aluminum in June 2025. Tariffs create uncertainty for businesses and investors. U.S. industries face increased costs for imported materials. Chinese exporters struggle with U.S. market access. The trade war dampens global trade growth and investment. Trade diversion concerns arise, affecting EU markets. Bilateral conflicts reshape global trade flows and relationships. Global trade tensions impact the international oil market. Tariffs and measures lead to crude oil price volatility. China's energy consumption significantly affects global demand. Trade actions influence China's economic trajectory and oil pricing. China invests in renewables to reduce fossil fuel reliance. The EU's green energy goals present collaboration opportunities with China. Concerns about dependency on Chinese green tech arise. EU investigations into Chinese subsidies highlight trade tensions. The EU navigates complex relations with China in the green transition. China leads the global electric vehicle market. EU collaborates with China in the EV sector. Joint ventures and investments accelerate EU's EV transition. EU-China collaboration offers mutual benefits in technology and market access. Tensions arise with EU tariffs on Chinese EVs. China's investigations into EU products reflect strategic competition. EU's probe into Chinese investments highlights trade rebalancing efforts. Strategic competition defines the EU-China relationship in the EV industry. Shifts in global trade alliances have mixed economic repercussions worldwide. Protectionist measures benefit some industries but challenge many others. Global supply chains face significant disruption and adjustment. Companies explore diversification strategies to mitigate risks. China focuses on high-tech industries to counter U.S. measures. Trade dynamics strain international trade rules and institutions. Navigating this era requires agility and awareness of geopolitical currents. The global trading system is rapidly transforming. EU's pivot to China and U.S.-China trade war shape future trends. Fragmentation into economic blocs may rise. Strategic competition over critical technologies intensifies. EU balances partnership with China and strategic protection. U.S. maintains a competitive stance towards China. Canada focuses on North American resilience. Success in this era requires strategic foresight and adaptability.